Hello and welcome to the Wisdom Workshop. Please like the video and subscribe with all notifications turned on so that you won't miss any of our wisdom improving videos. We often criticize our governments for their incapacity to complete huge programs and initiatives, especially when it comes to massive infrastructure projects. The United States has been in the headlines for its government infrastructure plan, which promises to invest more than $1 trillion in updating and restoring infrastructure around the nation. Already, critics argue that the project will not satisfy the standards for repairing the nation's crumbling infrastructure. The same may be said about smaller projects, which tend to be hampered by setbacks and large cost overruns. This is a pity, because infrastructure expenditure may be one of the most beneficial investments a government can undertake. In the short term, it serves as a stimulant. Bridges and roads don't construct themselves, they require workers, architects, urban planners, and maybe some environmental specialists. This, like a stimulus check, puts cash into people's pockets and helps to reduce poverty. However, unlike a stimulus check, the funds will be used to construct something that will continue to provide benefit to the economy long after regular stimulus checks have been forgotten. During the Great Recession, projects like the Hoover Dam were built in part to put people back to work. The dam is still supplying a reservoir and energy over a century later. In short, infrastructure expenditure is a good idea. Most infrastructure these days also serve to create sustainable energy, minimize time spent in automobiles, and other more beneficial things. Infrastructure investment though is high, which is perhaps why people are dissatisfied when projects never seem to get off the ground or become entangled in an unending web of red tape and advisors. We should look at countries like China, where infrastructure initiatives appear to perform flawlessly. Bridges and highways in the United States are deteriorating, while China is constructing technical feats previously unimagined. China built a whole hospital in 10 days, but San Francisco required 10 years to approve a new bus route. California has spent 20 years designing a rail network, while China has spent 20 years creating the world's largest rail network. And this isn't just China. Consider that the city of Sydney spent over $3 billion in 4 years building commuter trains that have reduced traffic while retaining all of the versatility of trains. It's easy to see why people believe that whatever China is doing is succeeding, but in fact, it's not. The pinnacle of China's infrastructure development, the gem in the crest of China's building frenzy, and a public display to the world that practically equated to "we're far more superior than new technology," is unquestionably excellent, but it also poses a danger to the Chinese economy, making Evergrande appear like a diversion. So how did China develop such a vast high-speed railway network in such a short period of time? Why did China construct such a vast network in the first place? And last but not least, how much did it all truly cost to put together? China is a vast nation with an enormous population. It's also a place where owning a vehicle is considered a status symbol. As a result, a strong rail network was critical for offering a cheap and efficient method for people to travel across the nation. For a good number of years, this requirement was generally overlooked because most Chinese laborers lived and died in the town where they were born in, and movement throughout the state was extremely limited, thus there was no reason for such a train network. Everything changed though by the early 2000s. By this point, the country's goal to open up to the rest of the world was well and firmly underway. Increasing numbers of younger folks were migrating from their tiny villages to metropolitan areas to offer the manpower required to drive the nation's ever-expanding industrial sector. These workers still wanted to see their relatives, but commercial air travel and personal vehicles were too pricey for the majority of them. Prior to the introduction of high-speed rail, most workers had to rely on bus trips that took days or even weeks to travel relatively little distances. By 2008, the Chinese government had already begun working on several high-speed rail initiatives, but the global financial crisis accelerated these endeavors. China was not immune to the consequences of the GFC. It was far more reliant on trade at the time than it is today, and trade volume declined sharply throughout this phase. A decrease in trade flows meant a decrease in both imports and exports, which was terrible news for a country that was reliant on global commerce. The response to this financial blow was fiscal stimulus. but China was hesitant to just give out cash since they didn't know how long the recession would persist. Instead, they sought to put individuals who could have lost their employment manufacturing goods for export markets to work on building high-speed railways. And this high-speed railway project put millions of people to work. The Beijing-Shanghai track alone had over 100,000 direct on-site workers, not to mention other workers in factories making steel and cement, transporting heavy materials to the location, or simply supplying products and services to the workforce as they gradually built out these tracks. It was largely due to the construction of high-speed rail that China avoided a slump in the economy. However, this is where the issues begin. The rail program has been plagued by corruption since its beginnings, which is somewhat typical of many projects by the government, particularly those in China. However, because this was one of the most important and widely publicized projects ever, the corruption scandals had to be bigger and bolder as well. The government found this to be rather problematic since it meant that they couldn't boast about how fantastic their new initiative was without those statements being swamped by reports of some official accepting a few bribes. Plus, a collision between two high-speed trains that occurred in 2011 only made these problems worse. It was later found out that the route had been overburdened due to a number of management problems, which is what caused the disaster. The public's trust in the high-speed rail system that China had just spent hundreds of billions of dollars creating was severely impacted by all of this. It also again brought up issues with cronyism and corruption in the already overcrowded Ministry of Railways. The government's response was to sell the railways to the state-owned company China Railway, in a way semi-privatizing them. A year later, CSR and CNR, the two businesses in charge of building the rail cars, united to establish the CRRC. These two big state-owned businesses started the current construction boom. These businesses had more discretion over how much money they could raise since they were legally separate from the government. Chinese railways have roughly $1 trillion in debt, which they paid off using a blend of financing from local governments, bonds issued by publicly traded companies, and loans from state-owned banks. On the most recent building push, though, issues arose almost immediately after the last rail was installed. Most of the immensely lucrative lines linking key population centers had already been created when China Rail began its most recent construction frenzy. This meant that the new lines were being built to cities, which would not require as many trains and thus would not generate as much money from ticket sales. Even though they weren't particularly lucrative, the government continued to support these initiatives because they wanted people to have access to and from these lower-tier cities. They did this for a number of reasons, the most of which were geopolitical. Aside from misguided political objectives, there were other issues as well. Their situation has gotten worse because of the aging of the railways and the increasing need for maintenance, the inability of the rail companies to raise their fares without driving people back to air travel or buses, and the arrival of COVID, which destroyed the market for train tickets to the point where almost every line was no longer economically viable. China, now faced with a state-owned company that is $850 billion in debt, is unable to pay it back. And right now, China is dealing with the effects of a continuing pandemic, a housing market catastrophe, and an energy crisis. It's hard to see a world then in which China resolves these problems. Let this new problem serve as a reminder, if nothing else, of why large-scale infrastructure projects like bridges, motorways, and train lines take years to plan and build in your own country. You may be frustrated with the bureaucracy, but pointing to China as the country that just gets things done may not be the best approach to illustrate how ineffective our own administrations are. Thank you very much for watching our videos. Please do like the video and subscribe with all notifications turned on so that you can help our video be recommended on the recommendations page.